to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Happy Canada Day, and in China, they're also celebrating a 100th anniversary.
Happy Canada Day. This is my Canadian dollar $20 bill coffee mug today in your honor. And I'm so honored to you.
The Queen.
Yeah.
All right. Taking a look at Bitcoin, we are seeing thin volumes. Bitcoin is slightly down about 3%, trading at $33,662 as well. And the Ether price index right now at 2124. So Lawrence and Emily, we are seeing, a lot of celebrations in Canada as well as China approaching their 100th anniversary. The markets are slightly down. Is the timing related?
Well, I can't speak for Canada, but in terms of China, China is celebrating the 100th anniversary of the Chinese Communist Party. And while this obviously is not the cause of China's most recent crackdown, in the past, China has been known to crack down on anything that they see as disruptive in the run-up to important political events. So, one of the main concerns that China has had with cryptocurrency is, people losing money and how this could cause political unrest and social instability. And so it would make sense that an announcement or a warning related to a crypto crackdown would come in the lead up to an event that is very high pressure and very tightly choreographed.
Mm-hmm. Is there anything else that may be affecting the markets, Lawrence?
Yeah, right now, it's been quiet. There doesn't seem to be any direction whatsoever. At least, okay. We're looking for ways to make money right now, and it's just not happening. There was a great story today from Muyao Shen about what's going on with BlockFi. And what's interesting is that one potential source of revenue for them was the GBTC, which is Grayscale, owned by the Grayscale Bitcoin Trust, which is owned by DCG, our parent company. And a way for people to make money was you basically deposit your Bitcoin over with GBTC. You get the shares, and 6 months later, you could sell it into the market at an incredible premium. In some cases, it went as high as 40% per annum. So that was your annual percentage rate. That's now gone
the markets have
negative.
Come down a bit, so they're not earning the same kind of yield, or it's coming down.
The premium that it had is now negative. So it's a negative premium. It's now at a discount, which might be great for buyers, but not necessarily for people who are depositing their BTC, their Bitcoin into this trust in exchange for shares that are locked out 6 months later. So that source of fat yield is gone. And so people are trying to find they're desperate to look for other ways to make money in a market that doesn't have any direction. And we'll see. I mean, the heyday of, the institutions are coming, everybody's coming in, that froth isn't there anymore. The retail froth isn't there anymore. So right now it's just batting around like a ball of yarn in the hands of a cat.
Mm-hmm. Well, all right. So the markets are still searching for direction. Let's take a look at our crypto markets update.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, checking in for a live look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at 33,610. Bitcoin is slightly down, almost 3% over the past 24 hours. And the CoinDesk Ether price ETX index is currently at 2122. Taking our next guest to discuss the crypto markets is Darius, CIO and co-founder of QCB Capital in Singapore. Welcome to the show, Darius. So a question that I often get is now the time to buy Bitcoin?
Well, I think you guys were just discussing exactly what I've been thinking, right? The market's a bit directionless. And we've observed that, in the last month or so, Tuesdays mark all the highs and lows. So we've called it turnaround Tuesdays. So if you see, it's just bouncing in a tight range, with Tuesdays marking all the peaks and troughs. And to answer your question as to where the market is looking for yield, there's one place that still has a decent yield, which is the option market. So vols are still trading at around 90 to 100, getting you yields of over 50% on decent strikes. And but I think our biggest call here is that as the market continues to trade in a range, I think the vols will continue to drop as well. So it's sort of the last bastion of yield, and if the market remains directionless, that will drop towards probably the 70 handle as well.
Hey, Darius, exactly that question. You were saying that the place for yields is just with the high vols, and essentially you would, I assume, sell your straddles and strangles there and try to earn some yields while the volatilities go down. But is there any way for is there any direction that the derivatives markets seem to be headed or seem to be pointing towards in the cash market? In other words, is there anything that we're seeing with let's say puts and calls that would indicate that the market expects either a large move up down the road or a large move down in the other direction?
Well, I mean, the option market is still indicating some fear. The fear level has gone down, but the put skew is still quite high, and so it indicates that the market is still pricing in a more likely move to the downside rather than the upside. So so I would say that's the prevailing sentiment. But as vols drop, that tends to be market positive as well. So I would say it's a bit of a mixed signal.
Darius, we've asked some other guests, so we always get different answers. So we're curious to hear what you think. Are we, in fact, in a bear market? Would you define what we're in as a bear market? And if so, how long do you expect it to last?
I personally don't think it's a bear market. The market is still up for the year, and I think we found very good support in Bitcoin at 30K. And in Ether, with the EIP coming up, there's been some attention and some constructive price action as well. And I'm personally quite positive on price. I do think that the market is slightly underpricing the news about El Salvador and Paraguay. Sovereigns declaring Bitcoin and accepting Bitcoin and diversifying their treasuries in the Bitcoin is to me it's a huge watershed. And I think the market's underpricing that a little bit. And as more sovereigns start to pick up on this, I think it could be a bit of a game changer.
So when we look at what you were saying before, that they were underpricing some of the fundamentals, nonetheless, what do you think caused that run up to 60,000? Is it? I mean, if it's not the kind of fundamentals that were announced subsequent, all right, you had MicroStrategy, you had Tesla announced that they were putting some Bitcoin on their balance sheet, but other than that, you didn't see anything of interest like El Salvador until well after Bitcoin was off those highs. So what led up to that high of 60,000? Was it mostly retail or was it institutional?
I think a mix of both, but the most important thing that led to the high is the access to leverage. The amount of leverage in the market at that point was quite intense, right? It's a market. I mean, insofar as Bitcoin is becoming more institutional and the infrastructure for trading is improving, we cannot ignore the fact that Bitcoin is a highly speculative, highly leveraged market. So it tends to overshoot and undershoot. I mean, in terms of overshoot, in terms of volatility, in spite of whatever fundamentals are or whatever headlines come up, right? So in the case of run up to 60K, if you look at the funding rates were at some points, the perpetual swaps were trading at the 500% funding rates. That's very unsustainable. So to answer your question, it was really a function of leverage, very, very high leverage being used in the space. And the subsequent move down was then a sort of deleveraging cycle. So we are at a position where the markets are kind of neutral in terms of leverage. The curves are pretty flat out to around 1-2 months, and then pretty linear, sort of a 6-7% in Bitcoin up to next year in June. So I think it's quite neutral now. And with the reduced amount of leverage, I think it trades closer to what the fundamental value is, so to speak.
Darius, it's interesting that you said that we're not in a bear market. It seems we always get a different answer depending on who we talk to. But the markets the crypto markets are down. Bitcoin is plummeting. About 40% had its worst quarter recently. But also, a lot of people want to know, what altcoins are you looking at, particularly Ethereum? Mike Novogratz has said that Ethereum may become the biggest cryptocurrency to flip Bitcoin eventually one day in a recent interview with Bloomberg. Meanwhile, Jack Dorsey is saying a hard no to Ethereum. Where do you stand, and which cryptocurrency out there has the best value to buy right now?
I'm very much in the Jack Dorsey camp. I still believe that Bitcoin is the king coin, right? And the first coin that most folks would buy. I mean, I'm bullish Ethereum as well. But the fact is that Ethereum has a ton of competitors, whereas Bitcoin, in essence, as a core store of value, is sort of a mainstay. So I would say Ethereum has the potential to trade higher than Bitcoin. And volatility-wise, we are long Ethereum volatility and short Bitcoin volatility. So I do think that there could be some good moves in Ethereum. But in the medium to long term, if you ask me which would hold value better, I'm always going to be on the Bitcoin camp.
You said that you think the market is kind of underreacting to news from El Salvador. Is the market overreacting to news from China?
I don't think the market is overreacting to news from China. I think it's a function of real supply from China. There's a lot of I've been watching CNBC. I think they've got it wrong, right? Everyone's asking like, why is it when when they shut mining farms down, supply goes down, shouldn't Bitcoin price go up? No, I mean, if you own a mining farm in China and you get shut down, and your Bitcoin cost price is 8,000, and you're not sure what your next steps are, the first thing you're going to do is sell your Bitcoin stash for security. So it is a function of just actual supply of the Chinese miners selling coins, right? And but in our view, I think that's transitory, meaning that they have a fixed supply. They will sell enough to ensure that they have security for their operations going forward. But they are intending to move wherever they're looking to move to, and they're going to start again. And so the supply is limited in that sense. And I'm actually surprised that it's held up this well in spite of the supply. We spoke to some very large miners, and they're surprised as well because they were the ones, they were selling a bunch of them, and they're surprised it hasn't cracked 30K and stayed below. So I'm actually really positive about this in the sense that there was real supply, but that real supply has reduced, and the price has held up in spite of that.
Do you see continued selling of Bitcoin from these miners who will need the cash to open operations elsewhere? Or do you think that they've kind of
yes, for sure.
They've kind of maxed out on how much cash that they need for this?
No, I think there's still supply, but my view is that the worst is over for now. They've sold a big bunch of it, and a lot of the crackdowns have already happened, and they actually a lot of them actually preempted it slightly. They were already looking at various countries to move their rigs to. So I think the worst is over, but I think we still get a trickle of supply as these miners still are in the midst of shifting operations and closing down their rigs in China.
What's the long-term sentiment that you get from the miners? I mean, how since you're talking to them, what's the feel that you get from them regarding the crackdown and regarding their prospects going forward?
They're extremely frustrated, right? Because China has always been playing this hot and cold game. Sometimes they're fine, sometimes they're not. And the truth is that China was a leader in the mining segment of crypto and crypto at large as well. So they're very frustrated that China has taken this stance. And of course frustrated that they have to shut down the operations. And the challenge for them is that there are not many countries that can house huge rigs. I think Canada, US, some of these countries, I think they've been looking hard there, but I don't think they have found a sort of a plug and play solution. So I think the frustration continues, And I think, because of that, we're gonna still get supply going on, and that's why I think Bitcoin's going to trade in a very tight range with a very hard cap on top. But yeah, there's continued frustration, but they are moving their rigs, so they are starting to restart operations again. So I think it's quite positive as well.
Do we have a sense of where they're, you were saying that they didn't know whether or not they would move them to, let's say, North America and what have you, but I mean, are they coming up with any interim solutions with where they're moving their rigs? Is it going to Kazakhstan, for instance? I believe it was one of the places.
It sounds like the most viable solution is Texas.
Huh. Texas.
Yeah.
That's interesting.
So,
well, we did hear about some mining firms airlifting to Maryland, and Texas is welcoming miners now.
What's the Texas angle that you've heard?
The real large guys, they went through a list of countries, and they're like, the only grid big enough is possibly Texas.
Wow.
Interesting. All right. Well, Darius, we'll wrap it there, but thank you very much for joining us this morning.
Thank you.
Right, that was QCP Capital co-founder and CIO Darius Sit. Coming up, Emily sits down with Oki Matsumoto, CEO of Japanese financial conglomerate Monex Group.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Welcome back. So earlier, Emily, you had the chance to speak one-on-one with Oki Matsumoto, who is the CEO of Japanese financial powerhouse Monex Group. They own one of the largest crypto exchanges in Japan, among other financial firms, right?
Yes, and Oki Matsumoto is very influential in the Japanese crypto world, and he's also very candid. So I recommend watching this video through to the end because he has some really interesting insights, in particular about some of the troubles that Binance has faced in Japan on the regulatory front. And he also discusses why digital yen is actually a national security issue. But first, we started out just talking about looking at an outlook on the Japanese crypto market. Japan was a crypto paradise for a while. Then regulators really cracked down after a major exchange hack. And so the first question I asked him was, is Japan back?
I think Japan is back. As you said, it is legalized, and the legal infrastructure is actually quite good in Japan. Also, I think that Japan is back in the retail crypto activity, but one big difference between the US and Japan is the institutional market. You do have a very good, strong, large institutional participation into crypto. If it's the corporations, if it's asset managers, endowment, there is, and also the legal framework is enabling them to come to crypto. And that is very different in Japan. So in the retail side, Japan is back and Japan is very active in crypto, but institutional side, it is kind of nowhere. So that is a really big difference between. Yeah.
Yeah, you've been saying that for years. So why is that? I mean, why has it been so hard for Japan to have an institutional crypto market?
Japan, the government actually made a legislation about a year ago that the crypto cannot be custodized by trust banks. So banks are basically completely away from, doing custodian for crypto. which is very different in the States. You guys legalized whereby the federal bank can do the custodian business for crypto, and that is not the case in Japan. And I think for institutional customers, they do want more institutional, kind of participation in custodian side. And that is still in Japan, like including CoinCheck, more like a startups doing the everything. If it's custodian to the, the customer interface, everything is done by those startups. In the States, there is, Fidelity and Courage, and we're hearing lots of banks coming into the custodian side. So that part is very solid in the States. But it's not the case in Japan. So that is really blocking the institutional participation to crypto, I think.
What's going on with Binance in Japan? I mean, technically, Binance isn't even in Japan, right? So why are they still getting these warnings?
Well, the JFSA claims that the Binance is doing a marketing activity inside Japan, although Binance is not, approved by JFSA. I think it's, kind of, I'm not sure if I can say this in the public domain, but I think it's kind of a stupid idea, because just because Binance has got the Japanese website, and then so that Japanese can easily open the account and such, so that the JFSA admits that Binance is doing marketing in Japan. But you know what? Everybody in the world do the business on the web using English, but England or UK government never calls those guys that you are doing marketing to English people, right? So I think about the JFSA's action is a little bit kind of stupid, but I think somehow Binance didn't. I don't know the detail, but I believe that they didn't listen to something from JFSA, so JFSA didn't like it. I think it's this kind of the fight against the regulators happen anywhere in the world.
Thank you for your honest assessment. One last question, because we're running out of time. Do you think Japan is going to see a digital yen sometime soon?
I believe so. BOJ is doing the POC right now, and it's this. China is, as you know, testing the E1 digital RMB in Beijing, Shanghai, Shenzhen. Those guys, they try to do the global debut at the Beijing Olympics, and from the national security, economical security point of view, for Japan to have a digital fiat, CBDC is quite important. So it is kind of a national mandate now, to create a digital yen. So it's a BOJ as well as the government working on it. I think it's just a matter of.
Why is it a national security issue?
Well, the dollar is really, could be more than the military. This U.S. dollar SWIFT corresponding banking system is really the strong, national security tool for U.S. and allies to protect themselves. And EU1 digital RMB is one challenge to crack that dominance of the dollar in the world. China is now the second largest, or could be the largest trading, partners, but still, vast majority of trade with China is settled in dollar. So in that way, U.S. is really kind of holding neck of China, which China doesn't like. So they come up with this digital yuan, idea. It means flip side of that is, if we just let China does that, it will decrease the power of this dollar kind of national security umbrella, So I think Japan is trying to create the kind of something which can, how do you say, counter this EU1 initiatives. It will be quite interesting, the initiatives, I think.
That was Monex Group CEO Oki Matsumoto. Very candid interview with Emily Parker. He outlined criticisms for Japanese regulators and said CBDCs are a national security issue. Very fascinating. All right, coming up, checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day. Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hello there, Nick. So what's the latest out of Washington? There were a couple of really interesting hearings going on yesterday.
Good morning. Yes, yesterday's big hearing was hosted by the House Financial Services Subcommittee on Financial Oversight. We've spoken about that a few times, and it finally happened, hosted by Representative Al Green and Representative Tom Emmer. It was a pretty interesting hearing. I think the biggest takeaway is all the witnesses kind of circle around the same idea that, we need more regulatory clarity within the U.S. to help companies operate more efficiently, or at least, more safely, while remaining compliant with U.S. regulations. This is a refrain we heard, throughout the hearing, in response to very different questions from, the different members of the committee.
So, Nick, I think the title of the hearing was something about a frenzy there. Was that what it was kind of titled? Was that subcommittee hearing?
Yeah, so that was the one, crypto frenzy, whether or not this crypto is going to lead to financial independence or financial ruin. Representative Green, when he opened the hearing, said that his question is really to conduct a fact-finding mission to figure out if crypto is something that can help his constituents do better, with their finances, to save more, to make more money, or if it was going to lead to folks, losing their money and, needing bailouts or needing assistance afterwards.
That's a pretty loaded term, right? That they're kind of, or was it just sort of? I mean, Tom Emmer is on that. Was one of the people who put it together. He's not exactly opposed to crypto. He's very crypto friendly. So, do you think that it was sort of, granted, it's just the name of the hearing, but does it give an indication of how the House looks at crypto and how the House, wants to broadcast to constituents about how it views this industry?
So after the hearing ended, I think my takeaway would be, for the most part, a lot of the members really were just asking questions. They weren't, you obviously have outliers on either side. You have those who think crypto will solve a lot of these issues, and you have those who think crypto is, the work of the devil. So ignoring the outliers, for the most part, I think the members really were, asking questions. They're trying to figure out, okay, what is the impact of this? What is the impact on climate? What's the impact on, market volatility? You had, the questions around, you had answers and discussions around whether one particular consensus mechanism is more environmentally friendly than another. You had questions around, does crypto need bailouts or, government assistance during, high, periods of volatility. So there were a lot of questions that were just, I think, genuinely questions. They were members, trying to get more information to become more educated around this before, looking to legislate. And the other side of that is there was no proposed legislation, no messaging bills or anything like that. A lot of times during these hearings, you'll see bills proposed that have different ideas. We didn't see that yesterday.
So what are the next steps then?
I'm guessing there's probably going to be more hearings. It doesn't seem like we're going to see any, proposed legislation anytime yet. So we are going to continue seeing this play out.
More education for
joy.
Congress. All right, Nick, thanks for joining us. Thanks for the update.
Thank you.
That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter for our tweet of the day. This one coming at us from Twitter and Square CEO Jack Dorsey with a hard no in response to a user speculating on whether it's only a matter of time before Dorsey buys into Ethereum. It appears the maximalism is strong with this one. Square has purchased $220 million worth of Bitcoin, representing about 5% of its total liquid assets at the end of the fourth quarter. All right, that's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.